Okay, traders. Now, I thought I'd just give you a bit of a heads up on what I'm thinking for the non-farm payrolls. So, just first of all, just having a look at the data, right? 6 variables. Well, they're not all that important. Okay, really, there's only 3: the US average earnings, the US non-farm payrolls, and the US unemployment rate. Now, actually, I was just having a look at the calendar, and they do actually note the impact for those 3 high and the other variables, well, normal. So, but just going back to this, right? So you go back to, well, I know it's around the global financial crisis or halfway through it. The US average earnings became a bit of a number, right? But really, it's the poor cousin of the non-farm payrolls and the unemployment rate. You know, forever, we were just watching those 2 numbers. So just consider the US average earnings as another variable, but the 2 important numbers are the non-farm payrolls and the unemployment rate. All right, so to me, just looking at the some of the major currencies here, I've got the 4 correlating pairs: Aussie, Kiwi, Euro, and Sterling, all correlating, and the dollar is rallying. Okay, had a nice pause. These instruments rallied back as the central bank started raising rates. Now they're on the back foot and the dollar's charging. Powell's talking about raising interest rates. If we get a strong number here, I tell you what, he'll be pushed into a corner. Now, when I'm looking at something like the non-farm payrolls, I'm always going to liquidity. And what I mean by that is I'll find the instrument that's got the most liquidity. It gives you more consistency in the price action, and that's the euro. Because I'm looking for a strong dollar, I just want to look at strong numbers, sort of almost put blinkers on. Okay, I'll be looking at the non-farm payrolls and focusing on the high number. So when I see the actual number come out, I'm thinking, yeah, 205, but in the back of my mind, I'm thinking above 300, it's massive, right? And the same for the unemployment rate. Okay, 3.4 is a good outcome. 3.3 would be amazing. I think we're already at 20-year lows as it is. Stranger things have happened. So just keeping an eye on the numbers. Really, the non-farm payrolls for me is the number that's going to be in play. I can't see the unemployment rate doing too much at this stage unless it blows out a bit, which will really screw up the trading opportunity. Okay, so back to euro. I'm looking to go with the trend, which is down, right? Long term, down. Now I come into my hourly charts and really focus on the opportunity. Now, if I drill in here to the chart, okay, the current price, and I know I'm about 8 or 9 hours out from the event. Once I've planned everything, is look at where the market is, because that could change my entries a little bit. So market around 105.95, 50 points to that weak trend line on the downside. And I've got the arrow there, no liquidity. Because it's only got 2 touches, no one's really banking on that as being a trend line that's going to hold, right? There won't be much liquidity there. On the top side, we've got a trend line with multiple hits. Okay, there will be selling there. There will be stops on the other side, but there'll be more liquidity around that trend line. So if you are looking for weak US numbers, have a look when it gets up to that trend line, because it's going to get a little bit sticky unless we see hugely weak numbers, all right? But once again, I'm just focusing on the easiest trade. I know there's 2 trading opportunities here, one to get long euro, one to go short, but I'm just looking to go with the trend, right? The trend's my friend. It's an easy trade. I don't have to go looking for trouble. So the downside is where the action's at. And I tell you what, just below that weak trend line would be a great place to get in. You're probably giving up 60 points by the time you get in. But if we get large variance, it's going to move 150 anyway. So don't worry about missing the first 50. Okay, a lot of traders get all bent out of shape thinking, oh, I'm missing it, etc. So this is the way I would play it, right? Before the number, I would expect, with no trend lines close, that the price will widen about 20 points either side. It mightn't look like it when you're looking at your screens, but believe me, there'll be discombobulation just before the release. So if you are using pending orders, make sure they're like 25 points away. The idea is to get medium to large variance anyway. If you're going in there with an entry 10 or 15 points, you're going to get chopped up. So depending on how aggressive you want to be, this is what I would be sort of thinking. Now, there's 3 opportunities here. To me, I could use a static pending sell stop using Gorilla Trader with a timed entry 25 points below the market price pre-release. Okay, I would put a quarter of the trade on that. The second one, if I'm lucky enough to be in front of the screens, I would look to trade live using T-Rex, and I would trade a quarter of the position. Okay, what I'm doing here, I'm reducing my trade size around the impact zone, right? Because that's where the most volatility is. Okay, so a quarter of the trade, the first one, a quarter on the second one. So if we get a spike down on, say, medium to large variance, and we get a quick spike back, that's when I will sell euros again. Okay, as I said, a quarter of a position. And the last trade where I'll have the other half of my position just sitting below that trend line, minding its own business, waiting for the instrument to move down, right? So that's pretty simple, right? Now, depending on how aggressive you are, will determine what orders you work with. Now, if you feel a bit anxious and you don't like the risk, well, then don't place the pending sell stop below the market. And you know what? Even maybe give up the trade trading live. Okay, there's no need to stress yourself out. Just go for the easy trade, and that would be placing a pending sell stop below the trend line using Trendline Trader. Nice and easy, relaxed. You can breathe through the event and see how it plays out. Okay, take out all the emotions out of it and stick with the easy trade. Okay, so they're the three setups I'm thinking of. Don't forget, it's a pretty hairy number, right? Well, I'm focusing on a strong outcome. Now, is there a chance of getting that? There's always a chance. And I know there was an anomaly last month where we had that massive number of 517. So the market is expecting a weaker number, just a correction of that. So we'll see how that goes. And I don't want to put people off looking to get long euro because you know what? That anomaly of last month's data, that could be reversed in this number. And then also the current interest rate hikes could be kicking in as well. There is a chance here we could get serious weakness and see a reversal in the trend. Okay, it's on the cards. Prepare for the volatility. And don't forget, you want the non-farm payrolls and the unemployment rate to be lined up. If you get one strong and the other weak, we're going to get some serious discombobulation, and you want to close out your positions if that's the case, right? So if I don't get large variance, right, I'll close out all the positions. So if I get small or medium variance, I will cancel or close out immediately. And when I talk about close out, I would expect that gorilla order to be kicked in, right? And I'll just close it out for a small loss. If I'm sitting there 10 points out of the cash, I'll just close it, right? That's what professionals do. Don't sit there and try and think, oh, hopefully I'll get out of break even. No, don't be silly. Don't run it into the ground. Just get out of the position and go from there. Now, don't forget, if you have a look at the structure there, that pending sell stop, because there's more risk, I've got a small trade size, but I've got a bigger stop loss. If I'm trading live or even using Trendline Trader, I can use a smaller stop loss because the immediate price action has gone and we've got liquidity back in the market. So I don't need to use that large stop loss anymore. All right. So that's the plan. Looking for large variance. How often do we get it? Well, I tell you what, we're in some weird times and it wouldn't surprise me. As I was saying, the trend for the dollar at the moment is up. I can see these instruments going down. No one's planning for really strong numbers. And the biggest pain in the market, where the biggest moves will be, is if the Fed raises rates again. I tell you what, that's going to create some huge moves. And this is where it starts, right? The Fed will be watching this like a hawk. If we see strong numbers, they'll be penciling in a interest rate hike at the next meeting. All right, guys, good luck. Hopefully that's not too long-winded for you. Good luck. All the best. Cheerio.